And in the U.S. stock index, futures tumbled ahead of Wednesday's open as market participants became increasingly nervous over trade frictions between the U.S. and major partners. At around 5:30 a.m. Eastern Time, Dow futures fell 125 points, indicating a negative open of 107.48 points, with the S&P 500 and Nasdaq futures pointing to a downbeat start to the day for their respective sessions. Trade anxiety continues to permeate global markets as investors await news surrounding the U.S. future trading relationship with the likes of Canada and China. On the data front, mortgage applications are due out at 7 a.m. Eastern Time, followed by international trade figures by 8:30 a.m. Eastern Time, and the quarterly financial report due out at 10 a.m. Eastern Time. In the earnings space, a number of brands are reporting, including DocuSign, Cloudera, and MongoDB. Investors will also be keeping an eye on the tech space after e-commerce giant Amazon.com briefly pushed its market capitalization to $1 trillion about a month after Apple. And in Asia, markets were largely negative today after Wall Street posted losses on its first trading day of the month, and as emerging markets sold off overnight. Japan's Nikkei 225 was down by 0.51% to close at 22,580.83. South Korea's Kospi also closed lower by 1.03% at 2,291.77, with industry heavyweight Samsung Electronics shedding 2.2%. In Australia, the ASX 200 continued the downward trend of the day, but sliding 1% lower to close at 6,230 points. Over in the Greater China region, Hong Kong's Hang Seng Index fell 2.33%. The Shanghai Composite closed lower around 2,704.34 after falling by 1.68%, while the Shenzhen Composite also saw a similar loss of 1.605% to end the trading day at about 1,442.25. And back here, Accra's stock market is poised for a massive boost in liquidity as Africa's biggest telecoms company, MTN Group, starts trading shares of its local unit today, having completed its initial public offering. While MTN sold only about a third of the shares available in the initial public offering, the 1.1 billion cedis, which is about $238 million, raised is still more than 3 times larger than the next biggest Ghana IPO. MTN sold 1.5 billion shares in its Ghana unit at 75 pesos each, a large addition to potential volumes on a market where 323 million shares were traded in the whole of 2017. The Accra debut comes as MTN fights billions of dollars in claims from Nigeria, which has ordered the Johannesburg-based company to refund $8.1 billion it says was repatriated improperly from the country and pay about $2 billion in back taxes. And news that South Africa's economy is in recession in the second quarter for the first time since 2009 was met with concerns and speculation on the streets of the economic capital, Johannesburg. Statistics South Africa said the economy contracted by 0.7% quarter on quarter, led by declines in the agricultural, transport and retail sectors. Our South African business correspondent, Nobukle Nkoma, now reports.
The gross domestic product data for the second quarter of 2018 has revealed that the South African economy has fallen into a recession. The first quarter results indicate that growth fell by 2.2%, but following a revision, it actually fell by 2.6%. The second quarter results indicate a further contraction of 0.7%. The agriculture, fishing and forestry industries, as well as the transport, communication and storage industries, were the largest negative contributors to GDP growth. The agricultural industry decreased by 29.2% and contributed to minus 0.8 of a percentage point to GDP growth. This was caused due to a drop in the production of field crops and horticultural products.
the recession, from what I understand, is that people's cost of living will basically go high. So you'd find that the lending rate would plummet, it would go up. So people who have loans and everything like that will have to initially end up paying more for all their loans and stuff like that.
I think everything's going to be expensive. Yeah, and with the way things are, it's very difficult to save. It's going to be very hard to save, yeah.
The transport industry decreased by 4.9% and contributed minus 0.4 of a percentage point to GDP growth, while the trade industry decreased by 1.9% and contributed minus 0.3 of a percentage point to the growth.
The lack of proper education and skills development, which leaves people to be unable to add value in the economy, and so they end up being unemployed and don't earn a decent income. Secondly, you've got very adversarial relations between trade unions and employers, workers and employers. And thirdly, there's far too much concentration of power in the country's economy in the hands of a few big businesses and state-owned enterprises, and not enough versatility emanating from small businesses.
The rand piled up on losses against the dollar, falling to a daily low of 15 rand 23 cents to the dollar, down by 2.4% on the day.
In the next quarter, we could well see a revival in agricultural output. We've had decent rains and decent planting, and the drought in the Western Cape is starting to dissipate. More, it's likely to be fairly marginal. I don't think we can look to a major recovery. In order to have a major recovery, we need to see far greater certainty surrounding issues such as land expropriation without compensation, that does finally see a lot of investment being committed to South Africa under the new leadership. But at the moment, it doesn't appear as if that is in store.
Expenditure in real gross domestic product also fell by 0.9% in the second quarter of 2018. From Pretoria, South Africa, Nobuhle Nkoma, Channels Television News.
A rating agency Moody's says Mozambique's private creditors face substantial losses from the government defaulting on its debt. In its recent report on the Southern African country's creditworthiness, Moody's maintains that government attempts at debt restructuring would likely extend beyond 2018 and that Mozambique's fiscal strength was very low. Mozambique admitted in 2016 to $1.4 billion of previously undisclosed loans, many of which went on upgrading maritime and military security. The disclosure prompted the International Monetary Fund and foreign donors to cut off support, triggering a currency collapse and leading to a debt default. In March, the Mozambican government outlined 3 scenarios to overhaul its debt burden, but Eurobond creditors rejected them, balking at a second write-down in as many years. Moody's rates Mozambique's long-term foreign currency debt as CAA3, deep into sub-investment grade. And Rwanda's Bank of Kigali has sold a 30% stake in its general insurance business to Swan General of Mauritius for 860 million francs. The lender, which is Rwanda's biggest by assets, plans to enter into the life insurance business, which is largely untapped in the country. It hopes the partnership with Swan will help it make headway. Bank of Kigali plans to increase the issued share capital of the insurance business, which is called BK General Insurance, to 5 billion francs from 2.9 billion currently, which will include Swan selling out about 640 million francs in relation to its stake. Bank of Kigali plans to list stock on the Nairobi Securities Exchange in the second half of this year as part of a drive to raise up to $70 million for investment. And after the break, we cross over to the Nigerian Stock Exchange for equities markets update. To stay with us.